Singapore's economy expanded 0.1% in the third quarter compared to last year, avoiding a technical recession just narrowly. Advanced GDP estimates showing that the economy also expanded 0.6% on quarter, recovering from the previous quarter's 2.7% contraction. But economists, they are cautioning that Singapore is not in the clear just yet. Michelle Teo explains.
Catering businesses like Easy BBQ have seen better days. The company says the volume of its customer orders have been coming down in recent months.
We found that actually the purchasing has softened a bit because people are more careful with their spending, and especially things like luxury items. So people are no longer buying as much and are more careful with their money.
This business reality is reflected in the data from the services sector as the industry continues on a downward trend. While advanced GDP estimates from the first 2 months of the third quarter saw growth in construction and services, it did not offset the contraction in manufacturing.
What is a little bit disconcerting is that we are starting to see that manufacturing and trade weakness starting to seep into the domestic consumer confidence and consumption story as well, which is why you see that actually the services growth this time around dropped below 1%, which is a number that we haven't seen since the global financial crisis.
The growth in the construction sector is a bright spot, expanding for the third consecutive quarter, and economists are upbeat on the continued growth in this sector.
Construction could hold up a little better because you've got a lot of public sector, your public sector spending going on, be it in transport, housing, so on and so forth. But we also need to take that into the perspective of a contraction in construction last year.
These include public infrastructure projects such as the Changi Airport Terminal 5 and North-South Corridor Expressway, where construction work will start in the next few years. For now, Singapore may have averted a technical recession, which is defined as 2 consecutive quarters of on-quarter contraction. But economists say that looking ahead to the fourth quarter and 2020, the growth of the manufacturing sector will still largely determine how the economy pans out for the rest of the year.
The base case for a very gentle bottoming, if that comes through, would be for construction to still hold up a little, offsetting some of the manufacturing pain, and services not to get as affected by the downturn. The warning here is the retaliatory tariffs coming on hard. Then that would really, I think, blow out of the water any case for 2020 being a bottoming in the economy.
We may get a modest rebound in terms of Singapore's growth prospects for 2020. Some of it is actually technical in nature because we are already seeing a very, very low base for 2019.
The official third quarter GDP will be released in November.